Ever wondered exactly what are assets and why are they so important? Let's dive right in. Assets in their simplest form are things of value that you own. They come in all shapes and sizes, from tangible assets like your home, car, or even a prized baseball card collection, to intangible ones such as patents, copyrights, and goodwill tied to your business. So they're not always something you can touch or see, but they hold real value nonetheless. And here's the kicker: assets aren't just stuff you own. They're your personal wealth generators. They could be working right now, earning you income or appreciating in value even as you watch this video. Whether it's through dividends from stocks, rent from real estate, or royalties from a patent, assets have the potential to put money in your pocket. So assets are more than just possessions. They are your wealth generators. Now that we know what assets are, it's time to delve deeper into the different asset classes. Asset classes are essentially categories of investments, each with their own risk and return characteristics. Think of them as different lanes on the investment highway. You've got your stocks, bonds, real estate, and cash equivalents, each with its own speed limit and level of traffic. Let's start with stocks. When you buy a stock, you're essentially buying a piece of a company. This gives you a claim to a portion of the company's assets and earnings. Stocks, also known as equities, can potentially offer high returns. But remember, with higher returns comes higher risk. Stocks are like the fast lane of the investment highway. There's the potential to move quickly, but there's also a higher risk of encountering turbulence. Next we have bonds. Bonds are debt securities which are like IOUs issued by governments or corporations. When you buy a bond, you're essentially lending money to the issuer in exchange for periodic interest payments and the return of the principal amount at maturity. Bonds are generally considered less risky than stocks, so they're like the middle lane of the investment highway, not too fast, not too slow. Now, let's talk about real estate. This asset class includes residential and commercial properties and land. Real estate can provide rental income and also appreciate in value over time. It's like the scenic route of the investment highway. The journey might be longer, but the views along the way can be rewarding. Finally, cash equivalents. These are highly liquid investments, such as savings accounts, certificates of deposit, and money market funds. Cash equivalents are the slow lane of the investment highway. They offer safety and liquidity, but with lower returns. Remember, understanding the different asset classes is key to diversifying your investments and managing risk. Each lane on the investment highway has its own benefits and drawbacks, and it's up to you to decide which lanes to take based on your financial goals and risk tolerance, so buckle up and enjoy the ride. Let's talk about a fundamental concept in investing: the trade-off between risk and return. This principle is the balancing act at the heart of all investing decisions. It's a simple but powerful idea. Assets that offer the potential for higher returns usually come with a higher level of risk. Think of it like a seesaw. On one end you have high-risk investments like stocks. They can offer substantial returns, but there's also a chance you could lose a significant portion or even all of your initial investment. On the other end you have low-risk investments like treasury bonds or money market funds. These typically offer lower returns but with less chance of loss. So why is understanding this trade-off so important? Well, it helps you create a balanced investment portfolio. By combining assets with different levels of risk and return, you can fine-tune your investments to align with your financial goals and risk tolerance. Remember, understanding the risk-return trade-off is crucial in achieving your financial goals. So let's recap what we've learned today. Assets, the backbone of financial understanding, are things of value that you own. These can range from tangible assets like cash and real estate to intangible ones such as patents and trademarks. We've also explored the concept of asset classes, which group similar investment types. These include stocks, bonds, real estate, and cash equivalents, each with their distinct risk and return characteristics. Remember, investments often involve a trade-off between risk and return, and understanding this relationship is crucial in building a balanced investment portfolio tailored to your financial goals. In essence, assets are the building blocks of wealth, and knowing the basics empowers you to make informed financial decisions. With the knowledge of assets, you're now empowered to make smarter financial decisions and grow your wealth. Stay tuned for more insightful content on financial literacy.